Bitcoin is at a really critical point right now. And honestly, there are some serious warning signs flashing across the market. So today, we're going to break down the key signals that could tell us if a major crash is, right around the corner.
All right, let's just get right into it. The big question, could the world's biggest crypto really fall all the way back to $59,000? Look, this isn't just some random number pulled out of thin air. A legendary trader, someone with a 50-year track record, has put this exact number on the table. We're about to find out why. And that trader is Peter Brandt. His analysis is pointing to not one, but two potential landing zones for Bitcoin. First, a dip to around 81,000, but then a much, much deeper correction all the way down to $59,400. So let's really dig into the data behind this pretty bold prediction. Okay, so the first major warning sign, it's not some complicated forecast. It's actually hiding in plain sight, right there in the trading data itself. The interest from buyers, it's really starting to dry up. Now, before we get into the numbers, let's make sure we're all on the same page. When we say spot trading volume, we're just talking about the amount of Bitcoin being bought and sold for real, right now. You can think of it as the market's pulse. It shows us how much genuine participation and belief there is in actually owning the asset. So here's where it gets really interesting. Binance, which handles more than half of all Bitcoin spot trading, saw its volume just collapse by a staggering 21% in November. I mean, that's a $40 billion drop in a single month. And listen, this isn't just a Binance problem. This trend is happening market-wide. You look at Bybit, they saw a 13.5% drop. OKX was down 18%. The message here is pretty clear. The enthusiasm to just buy and hold Bitcoin is fading, and it's happening across the board. And this chart, wow, this really illustrates the shift in what the market is doing. Only 23% of the trading is for actual Bitcoin. The other 77%, that's all happening in the futures market. We're talking pure short-term speculation. This tells us that traders are way more interested in betting on volatility than they are in actually owning the asset for the long haul. And that is a classic sign of weakening conviction. All right, now let's zoom out a bit and see how this all fits into the bigger economic picture. Because none of this is happening in a vacuum, right? There are some huge macroeconomic forces at play. So according to Peter Brandt, this potential drop isn't actually a reason to hit the panic button. He sees it more as a healthy, natural cleanup. In his view, the market rally just got a little overextended as traders started pricing in a non-stop parade of good news. This slide really helps put it all in context. If you think back to 2021, the market was bracing for rate hikes. But today, everybody is expecting rate cuts. The problem is, crypto and other riskier assets have already rallied as if those cuts are a done deal. So, the good news? It might already be priced in. So here's the crucial point. The market just got ahead of itself. It was fueled by a whole lot of optimism. From Brandt's perspective, any kind of pullback now isn't a crash in the way we normally think about it, but it's simply the market, quote, taking out the extra air and getting back to a more realistic valuation. Okay, so with all that as the backdrop, what could actually trigger the next big move? Well, let's look at the immediate future because there are three major events happening this week that could absolutely pour fuel on the fire. These are the three big catalysts that every crypto watcher needs to have on their radar right now. We've got the Fed's interest rate decision, a whole wave of new tokens about to hit the market, and, of course, the flow of money in and out of those big Bitcoin ETFs. First up, the Federal Reserve. And officials seem pretty divided. If they signal that rate cuts are coming soon, that's a dovish stance. It could put a floor under the market. But if they sound hawkish and hold firm, arguing that inflation is still a threat, that could easily accelerate a sell-off. The stakes here are incredibly high. Next up, we've got these token unlocks. Just this week, over $30 million worth of tokens from projects like Eigenlayer and Bluefin are going to be released into the market. This creates instant selling pressure, simply because a whole bunch of new supply becomes available to be sold. And the final headwind, it's coming from the very things that fueled the last rally. The spot Bitcoin ETFs saw over $87 million in outflows last week. And this is a big deal. It's a signal that institutional investors, the so-called smart money, are starting to pull back. So where does all this leave us? Well, what we have is a convergence of several pretty powerful forces, and they're all pointing in the same direction, down. Let's just connect the dots one more time. We've got waning investor interest, and we see that in the plummeting spot volume. We've got major macroeconomic headwinds, with the market having already priced in all the good news. And on top of that, we have a series of immediate, bearish catalysts right on the horizon. It is a challenging environment, to say the very least.
All of this really brings us back to our central question. When you combine fading interest from both retail and institutional investors with a really tough economic backdrop, you've got to ask yourself, is the path of least resistance for Bitcoin now pointing down? The crypto market is so clearly at a crossroads, and the signals we've just gone over are going to be absolutely crucial in the coming days and weeks. To make sure you don't miss how this whole story develops, go ahead and hit subscribe for our next explainer. Thanks for tuning in.